The rise of the British Empire is often framed as destiny, a triumphant march of discipline, strategy, and naval brilliance. Textbooks show maps shaded red, stretching from Canada to the Cape, from India to the Caribbean, as if a nation of islanders simply willed themselves into global dominance. But the real story is darker, far colder, and far more calculated. Because Britain didn't conquer the world with muskets and manners. It conquered the world with money. Money it didn't have, money it borrowed, money extracted through systems designed to look civilized while functioning like machinery built for control. And to understand how a small, rain-soaked island became the financial center of the world, you have to wipe away the romanticism. And look at the one truth historians always leave in the footnotes. The British Empire was a financial project before it was a military one. In the late 1600s, England was weak, nearly bankrupt, politically fractured, and constantly overshadowed by richer European rivals. Spain had gold. France had armies. The Dutch had trade networks. England had debt, more debt than it could ever hope to pay. But instead of collapsing under it, England learned to weaponize it. The invention of the Bank of England in 1694 wasn't a patriotic achievement. It was a bailout. A group of private financiers offered the government money in exchange for unprecedented power, the right to issue banknotes, manage national debt, and effectively turn the crown into a client of the banking class. That moment didn't just save England. It rewired it. Because once the Bank of England existed, war wasn't something the country needed to afford. It was something it could finance, borrow against, leverage, monetize. Debt became a business model. War became an investment. Empire became a return on capital. And suddenly, England could outspend nations far richer than itself. Not because it had more gold, but because it had discovered the alchemy of credit. This new financial fuel spread through the economy like wildfire. Stock markets blossomed. Joint stock companies emerged. And at the center of it all stood one corporation. The most powerful corporation the world had ever seen. The East India Company. It wasn't a trading firm. It wasn't a government agency. It was a hybrid monster. A corporation with the powers of a nation, the right to tax, to wage war, to rule territory, to raise armies. It became the empire before the empire. Shareholders in London grew wealthy, while millions across Asia and Africa were crushed under its rule. Every ship returning from Bengal, every warehouse filled with tea or textiles, every ledger entry of profit was financed, insured, and celebrated in London's expanding financial district. But this was only the surface layer of Britain's money engine, the part people could see. Beneath it lay the dark money that truly scaled the empire. The slave trade, the Caribbean sugar economy, the labor extraction systems in India, the opium networks in China. These weren't tragic footnotes. They were the foundation. The British financial system, the banks, the markets, the insurance houses, grew fat on profits extracted from bodies, plantations, and forced labor. Lloyd's of London insured slave ships. British banks financed plantations. Parliament protected the interests of investors while ignoring the suffering that created their returns. Ordinary Britons, celebrated as industrious and thrifty, never saw the machinery behind the cheap sugar in their tea, the cotton in their clothes, or the wealth pouring into their ports. They saw prosperity. They never saw its price. This is the story the empire never told, the story your school never taught, the story hidden beneath every map shaded red. The British Empire wasn't built by the sword. It was built by capital, extracted violently, deployed strategically, and protected ruthlessly. And once you see that truth, the entire rise of Britain looks less like destiny and more like design. To understand how Britain transformed from a fragile kingdom into the financial command center of the world, you have to picture London in the early 1700s, not the polished imperial capital we imagine, but a chaotic, muddy trading city humming with speculation, rumor, and debt. A place where merchants, bankers, politicians, and private investors were discovering something intoxicating. Money could grow faster through finance than through production. And that realization changed everything. Because once England learned how to scale credit, how to turn future profits into present power, it no longer needed to match its rivals in gold or armies. It simply needed to borrow more cleverly than them. The Bank of England became the heart of this system. The London Stock Exchange became its lungs. And the empire became the body they animated. The Old World empires still operated like kingdoms, relying on treasure fleets, land taxes, and the slow accumulation of resources. Britain, meanwhile, had discovered a new kind of empire, an empire funded by speculation, backed by debt, executed by corporations, and enforced by the Royal Navy. And at the center of this hybrid machine stood the East India Company, not a trading house, but a shadow government that answered not to the crown, but to capital. It conquered territories not for glory, but for dividends. It enforced laws not for justice, but for shareholders. It built armies because armies protected profits. By the 1760s, the company controlled more people in India than the British government controlled in Britain itself. And every pound extracted from Bengal, every grain of rice seized during famine, every tax collected under threat of force, all of it streamed back into London's financial markets. But this wasn't Britain's only revenue stream. The empire had a second engine, even darker than the first, one the country still refuses to confront honestly: the transatlantic slave economy. For more than 2 centuries, Britain industrialized human misery. It built ships to transport enslaved Africans. It insured those ships at Lloyd's of London. It financed plantations through major banks whose descendants still dominate the city. It built fortunes so large, they quietly shaped British politics for generations. And when slavery was finally abolished, Britain didn't compensate the enslaved. It compensated the slave owners. A bailout so huge that British taxpayers, including descendants of the enslaved, were still paying it off in the year 2015. This wasn't a moral awakening. It was an asset transfer. The profits of slavery were laundered into the British financial system, converted into investments, land ownership, bank reserves, and political influence. They became the invisible scaffolding of Britain's rise, wealth built on human suffering, disguised as national greatness. While ordinary Britons enjoyed cheap sugar, cheap tobacco, and cheap cotton, they had no idea the true cost. For them, empire looked like progress. For the bankers, it looked like profit. For the enslaved, it looked like hell. Meanwhile, in India, the empire's financial spine, the extraction was even more systematic. The British didn't just tax the population. They restructured India's economy to funnel wealth directly into London's markets. Indian textile workers were forced into poverty to protect British manufacturers. Farmers were squeezed by impossible tax burdens. Rice was exported during famines. Entire provinces were drained to maintain the empire's military machine. India didn't just fund the empire. It subsidized Britain's entire rise into global power. And across the world, wherever Britain found wealth, sugar in the Caribbean, diamonds in South Africa, opium in China, the pattern repeated. Finance dictated policy. Policy dictated extraction. Extraction fed the machine. Even the Opium Wars, 2 conflicts that sound like distant historical tragedies, were fundamentally financial operations. China resisted British drug imports. British investors demanded protection. The Royal Navy enforced compliance, not because of freedom, not because of trade fairness, but because investors expected returns. The British Empire wasn't a military juggernaut. It was a global investment vehicle backed by the most powerful military insurance policy on earth. And behind its elegance, discipline, and ceremony, behind the Parliament speeches and patriotic parades, behind the myths of civilization, progress, and order, was a simple truth. Britain got rich by turning entire continents into revenue streams, and London into the clearinghouse for the world's darkest money. By the 19th century, the British Empire had perfected something no previous empire in history had ever achieved: the fusion of finance and force into a single global operating system. Most empires before Britain conquered land. Britain conquered cash flow. Its soldiers might have held the rifles, but it was London's financiers who decided where those rifles pointed. The real battlefield wasn't the seas or the colonies. It was the balance sheets, the share registers, the insurance ledgers, and the growing echo of speculation inside the city. Because by now, Britain was no longer fighting with muskets and cannons. It was fighting with interest rates. The Bank of England became the quiet puppeteer of foreign policy. The London Stock Exchange became the empire's nervous system. Insurance houses like Lloyd's became the empire's risk department. And private banking dynasties became the empire's bloodstream, carrying capital to every corner of the world where profit could be extracted. Most empires governed through fear. Britain governed through credit. It didn't need to expand faster than its rivals. It just needed to borrow faster than them. And nowhere was this financial imperialism more brutally efficient than in India. India wasn't just a colony. It was the empire's treasury. Taxes collected from Indian farmers financed British wars. Indian soldiers, the sepoys, fought Britain's battles at a discount. Indian cotton fed British mills. Indian opium financed Britain's trade deficit with China. And the most staggering part? Britain ran India at a profit, a massive one. For every pound Britain spent on the colony, it extracted far more through crushing taxes, monopolies, forced cultivation, and the systematic dismantling of local industries. Every famine, every drought, every mass death event had a line item on a ledger in London. This wasn't mismanagement. It was design, a structure where the suffering of millions became a financial instrument, where starvation was not an accident, but a predictable outcome of a machine optimized for extraction. And as India filled Britain's coffers, Africa filled its arsenals. Across West Africa, British merchants traded guns, iron, textiles, and manufactured goods. But these weren't transactions between equal nations. These were engineered exchanges where Britain controlled the credits, dictated the prices, and set the terms of repayment. Minerals, rubber, palm oil, the raw materials needed for Britain's industrial revolution, flowed out of Africa at prices defined not by supply and demand, but by imperial decree. This wasn't free trade. This wasn't open markets. This was financial entrapment, centuries before the term even existed. Every colony became a balance sheet. Every resource became collateral. Every human being became a line of cost or revenue. And as this financial web widened, London transformed. The docks expanded, warehouses filled, fortunes multiplied. But the greatest change happened quietly, in the drawing rooms of Mayfair, in the boardrooms near Threadneedle Street, in the counting houses along Lombard Street. Britain became the world's risk manager. If a ship sank, Lloyd's paid and raised premiums. If a war began, British banks financed both sides and collected interest. If a rebellion broke out, Britain sent troops and billed the colony afterward. If a trade collapsed, the East India Company rewrote the rules and London enforced them. It was the perfect system: private wealth, public power, global extraction. And at the center of this spiral stood a financial family whose name would haunt conspiracy theories for centuries. Not because of myth, but because of scale: the Rothschilds. They didn't build the empire, but they financed the empire's behavior. Government bonds, war loans, national debts, mineral concessions, railway projects, colonial expansion. Their networks allowed Britain to move money faster than any nation alive. Faster money meant faster wars. Faster wars meant faster conquest. And faster conquest meant deeper financial dependence on London. The empire wasn't British. It was a syndicate. London was the headquarters. And yet, as wealth poured in, another transformation took place. Something subtle, something dangerous, something the empire couldn't see happening until it was nearly too late. Other nations were learning the same game. Germany industrialized. America built railroads, factories, and banks on a scale Britain could no longer match. Japan rose. France rebuilt. Britain wasn't collapsing, but for the first time in centuries, it wasn't alone at the top. The global financial architecture it had created was no longer exclusively its own to control, and cracks began to form, not on the battlefield, but on the balance sheet, not in the colonies, but in London itself, not through rebellion, but through competition. The empire's money machine had grown so large, it was beginning to drag Britain toward a future it didn't yet understand. By the early 20th century, the British Empire looked invincible from the outside, a red-shaded map covering a quarter of humanity. But inside its financial core, something was going very wrong. The very machine that powered the empire had turned into its greatest liability. Britain wasn't running an empire anymore. It was maintaining a global debt system it could no longer afford to police. Wars that had once been profitable became impossibly expensive. Colonies that once funded the empire now demanded independence. And the financial architecture that once made Britain powerful began to hollow it out. World War I wasn't just a military catastrophe. It was a balance sheet catastrophe. Britain didn't bleed soldiers first, it bled money. The country had to borrow so aggressively from American banks that, For the first time in 300 years, London was not the lender, but the borrower. New York started issuing the loans Britain once wrote. Wall Street began insuring the risks Lloyd's once monopolized. And deep inside Whitehall, the unthinkable realization took root. The empire no longer owned its financial system. Its financial system owned the empire. Then came World War II, a second, even more devastating financial implosion. The empire's colonies were sacrificed economically to keep Britain alive. India, West Africa, the Caribbean, they funded the war through taxation, famine, and forced labor, draining their economies to prop up a metropole drowning in debt. When the war ended, Britain didn't emerge victorious. It emerged bankrupt. The global power it once projected through credit and extraction now belonged to the United States. The financial center of the world shifted from London to New York in a single generation. The empire's balance sheet, once limitless, collapsed under its own weight. But the darkest twist was still ahead. Britain didn't truly let go of its empire. It just changed the operating system. The colonies were granted flags, parliaments, and national anthems, but the financial chain stayed intact. London reinvented itself, not as an empire of land, not as an empire of armies, but as an empire of offshore money. The city of London, that square mile untouched by democracy or jurisdiction, became the quiet capital of global tax evasion, illicit wealth, post-colonial debt, and financial secrecy. Former colonies remained locked into British banking networks, sterling trade zones, and interest rate obligations. The imperial flag came down. The imperial cash flow did not. And this is the brutal, final truth. The British Empire did not fall. It mutated into a financial shadow empire where the extraction never stopped. What began with the Bank of England in 1694, what expanded through the East India Company, what was fueled by slavery, opium, and colonial taxation, never truly ended. It simply became harder to see. A world once ruled by soldiers is now ruled by balance sheets. And the empire that perfected the model left behind a legacy of inequality, debt traps, currency dependency, and offshore wealth, a legacy still shaping global finance today. The story of the British Empire isn't about glory or genius. It's about a financial machine that learned to turn land, people, and politics into profit. A machine so powerful it outlived the empire that built it. And even today, long after the flags came down, the architecture of that system still shapes global wealth, global poverty, and the invisible pipelines of money that move through London's financial shadows. Because empires don't disappear, they evolve. And the one Britain created left behind a blueprint that every modern power now follows. A world where money, not armies, decides who rules and who obeys. If you want more financial documentaries like this, subscribe. There's much more the history books never told.